Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Monday, September the 26th, 2011. Well, the change of trend today, we have a candle that's made a higher high and a higher low. Previous day's trading, we had a spinning top type candle which raised doubts about continuation of the previous trend to the downside, and those two very bearish candles to the downside, and then we saw the market find support down around the area between 1115 and 1100. A very large green bodied candle today, and almost matching the size of the previous red bodied candle. And we've had the market closing up towards the high, so we've had a day where the buyers have made some strong net bullish progress on the day, and they've closed this market with control and shown some good strong commitment to take this market higher. The market did find resistance at 1163, which is a previous area of support and resistance. Looking at the Ichimoku indicators, we are trading down below the cloud, so we have an overall negative bias in this market, and the market is trading down below the Kijun-sen, so the market is bearish in the medium-term time frame, but we are trading back towards the flat Kijun-sen, and that happens quite often when that Kijun-sen is flat. The market is trading just below the Tenkan-sen as well, so bearish in all three time frames, but only just bearish in the fast-term and medium-term time frame. The market's trying to find equilibrium in that fast-term and medium-term time frame. If this market does continue to rally, there is strong resistance overhead at the 1163 region, 1173.83. Funny how they all end in 3, but that's those areas, and it's quite a large zone of resistance for this market. But also, we have resistance at the cloud around 1190, extending all the way up to roughly about 1130. So very strong resistance overhead to the downside. Strong support down to around 1100 and then around 1080. So the trend is up in the first time frame. Good little bit of momentum that the market's built today, and we need to see how the market reacts to this area between where we're trading at the moment, around 1163 and 1173. Next, moving on to light sweet crude oil, and we can see continuation of the trend to the downside today, a candle with a lower high and a lower low, but another spinning top type candle for 2 days in a row. And this is a candle of indecision, so 2 days of very indecisive trading. Potential for this market to change trend is very high because we haven't seen follow through from the bears. They've lost commitment each time they were trading down around just below the 78 region, and we saw the buyers come back in, but the buyers failed to take control of this market by the same token, and that's why we haven't seen this change of trend yet. So very strong potential for a change of trend. So the high of this current candle at 88.97 is very important for a potential higher high and higher low. If we do see that change of trend, then we do have resistance around 84, and that coincides with where the Tenkan-sen and Kijun-sen are trading roughly, so a very strong area of potential resistance. Above there, 85.11, and then at the bottom of the cloud, very strong resistance through there to the top of the cloud, and the previous strong area around 90 is a very strong barrier to the market trading at higher levels. To the downside, obviously, that 78 area and the 79.25 area are very strong areas of support, and certainly then down to 75.71 where we see this major swing low, and we saw the sellers lose commitment previously in a major way. That's very strong support down around those levels. Now the market is bearish in all three time frames by trading down below that, so bearish in the big picture terms, but also bearish in the fast term and medium term time frame by trading below that Tenkan-sen and the Kijun-sen here. So obviously for tomorrow's trading, following these indecisive type candles, there is a good strong potential for a change of trend to the upside. Next, moving on to gold, and we can see that the trend is continuing to the downside. We have a candle that's made a lower high and a lower low, but we have had a lessening of the downside momentum because the size of the body of this current candle has decreased compared to the previous day's trading. We had a very bearish candle, a very large red-bodied candle, which broke out to the downside below the cloud, giving us a very strong sell signal in Ichimoku charts by breaking up below the cloud and breaking out on a bearish candle. Also, the market took out that support at 1641. Today's trading, however, we did trade down much lower and tested down below this important area of support at 1559. We actually traded down to around 1530, and we saw the sellers lose commitment around that area. So there is a possibility that we could have a change of trend to the upside for tomorrow's trading. The candle is still red, however, so the sellers have made net bearish progress, but they've failed to close this market with control because they've only closed just around the midpoint level of the range of today's candles. So they did lose control that they had when they were trading down around this level. So this market does offer some potential for a change of trend. Having said that, however, there is some strong resistance for any potential change of trend. And the market will need to trade into the cloud if we are going to see a bullish market in big picture terms again. So it's likely that this bearish market in big picture terms, or at least a neutral market, will persist for some time. So the market is also bearish in the fast-term and medium-term time frames by trading down below the Kijun-sen and Tenkan-sen as well. Both of those indicators are pointing down fairly sharply, reflecting this very strong downside momentum that we've seen in this market over the last week or so. And quite often when we see the market bounce when they have very strong downside momentum, the first place where they find resistance is at the Tenkan-sen, and that's trading at 1689 at the moment. And that coincides roughly with this area of potential support around 1683 and roughly with the bottom of the cloud. So there is good potential for resistance around that level, and then perhaps if the sellers do come in again, we could see the market trading to lower levels below there and testing down to some of these levels that we've traded through over the previous few days. So a bearish market now in all time frames, but some of that downside momentum is starting to lose its speed, and we have seen the sellers lose commitment on today's trading.